do? You want to go to Google? You want to type in your credit union, Members First Credit Union, New Hampshire, right? Cool. Once we get in there, boom, go to the home page. Now, what we're looking for is we're looking, for a credit product. So we're looking to borrow, right? So they got your home loans, they got your consumer loans, they got your business. We looking for consumer credit cards. We striving to build our credit profile at the very bottom. So we're gonna need a secure credit card, and we need to know if our institution actually has these products, right? So we're gonna do, part of stuff I might be moving too fast. Consumer credit card, you choosing the right credit card is easier than ever. Okay, well, let's go right here, learn more. We want to learn more about these credit cards, right? It's gonna take us to another page, which we cool with. Now, as you can see, they have all of the member first credit card products, right? They got $150 bonuses. They got what else they got over here, man? They got low APRs for 15 months. So they got some decent products. They got 5% cash back. They got 4 times unlimited points plus a $250 bonus. They got some decent credit cards, man. They got this one, $500 bonus. But you do gotta pay attention to $500 bonus. It's also a $390 annual fee. But that's cool. They got a credit card for college students, and then they got the credit cards for people trying to build credit like you. So they got two of them. They got the max secured credit card. It gives you 5% in two categories. So if you spend a lot of money in restaurants, you could choose that as a category. If you do a lot of grocery shopping, you can use that as a category. If you purchase gas, and that's cool. So you actually got a secure credit card where you can actually earn cash back. Now we know and understand that this is a beginning product, so that APR is 30% basically, which is a lot, but it's pretty typical for an entry level credit card. Same thing here. They just don't give you the 5% back. They give you a little better APR. But in all essence, if I had to choose between the two, there's no annual fee, which remember we pay attention to this. No annual fees. Yeah, no annual fees. We lit. So now what we gonna do is we most likely gonna choose this one, right? Just because of what it offers. Now I will say that after we science this up, we're gonna get on the phone and we're gonna call a representative because we want to ask some questions. We want to know which card is better for us, right? Just looking, we might say the 5% is better, but if we don't have plans on spending a lot of money with this card, then maybe this isn't the card for us. Maybe this one is. It says right here because you can earn interest on your companion secure savings account, which is something we want. We want to understand this. That I believe what it means is that we can put ourselves in a position to pay interest, and off the interest that we're paying, we will pay it to ourselves in our savings account. So we want to get on the phone with a rep and we want to figure that out. But for now, we just gonna go to we want to learn more about the card, right? So we dive into it. You see what they got: 5%, 2%, 1%. Build solid credit habits with these added features. So this is the part that we got to pay attention to. You set the credit line. We need to know how much we can max this thing out. Now, the reason why you want to put $5,000 on an account like this is because when they lift your secured savings savings account, right? When they give you your money back, they're gonna give you your $5,000 back or whatever amount you put in, and then you're gonna have 5,000 as a credit limit, which is good because now you went from having 5,000 cash to having 10,000 total. 5,000 in cash, 5,000 in credit, right? That's what we want. We want these nice size chunks, and I'll use myself as an experience. Um, I'll use the experience that I went through myself, part of self, I should say. I started off with a $1,500 secure credit card, and I was able to build that up to 19,600. Now imagine if I would have started with $5,000 instead of $1,500. That credit card would probably be 25,000 or 30,000 right by now. So after that, after we signs it up, we look into the information and we get a broader aspect of what it is. We then get on the phone with the rep. When we get on the phone with the rep, the questions that we want to ask, we want to know what's the time frame because it don't show it here. It don't tell us when we get our money back, right? So we want to know how long is this credit card going to be secured until it's unsecured. It's normally I want to say 12 months normally. Sometimes it's 6 months, and it really just depends on your spending habits. Because if you practice bad spending habits, they're not gonna unsecure this joint. You know what I'm saying? So you want to practice good spending habits. You want to pay 90% off each month. Leave that little 10% so they can make their little 30% interest off it, right? At the end of the year, we probably only want to leave them with $100, $200 total that they get in terms of interest off of us. That way we can limit how much money they make off us, right? So if we only leave a $200 balance, the most money they're gonna make also off us is $60. So and we cool with that because you got to pay to play. We at the bottom. So you want to know what the time frame is. You also want to know what is the credit score needed. Sometimes you need a credit score to get in here. You usually don't, but sometimes you need a certain credit score. You might need a 550 or something. Who knows? But we want to get on the phone call with the representative and we want to ask. We also want to know, do they do hard inquiries? If they do a hard inquiry, we want to know which borough they're pulling from. Because if they're pulling from all three boroughs, we might not want to go with the secure credit card. We might want to go with a different bank or a different financial institution that only pulls from one borough. That way, we can go to three different individual credit institutions and obtain a secure credit card from each of them because they all only pull from one borough as opposed to getting one card that pulls from all three, right? So after we do that, we get on the phone, we come back, we hit apply, put our information in, social, email, phone. They want to know your employment. They want to know how much annual income you make. So you basically take, however much money you make an hour, times that by 40, then times that by 52. So if you make $20 an hour times 20 by 40, that's 800. Then you take your $800, you times it by 52. That's how much money you make annually. You put your housing status in here, account relationship information, and then you pick the account that you want to use your secure funds from. Terms and conditions, you can read them. Always tell people to read them. Make sure them annual fees ain't there. Boom. After we read the terms and conditions, we sign and we good to go. So that's how you obtain a secure credit card from Members First Credit Union. And that pretty much sums it up. Contact me if you got any questions, but this is pretty much it, family. Peace.